Let's cross over to VOA studio in New York City, where my colleague Jill Maladrino is standing by to talk to us about the latest developments there. Good morning, Jill. Well, I could say good morning to you there, and it's good afternoon out here. Well, Jill, global markets woke up to the news of the missile strikes against Syria by the U.S. Although your market is yet to open, what feeds are you getting from both the traders and investors?
Well, it's really interesting to see how the market has digested this news. Around 9 o'clock p.m. Eastern last night, I was actually looking at the S&P futures, and we saw these big red candlesticks to the downside, and then the news started coming out about the attacks in Syria. At one point on the futures, we were down nearly 20 handles, and we actually rallied back around 7 a.m. this morning to positive. We're down a little bit now because of the employment data, but I think that what you really need to look at here is not necessarily what equities are doing, but what's happening in the crude markets. We saw a spike in crude about 1%, not because Syria is a major producer, but Russia is. And then you have the Middle Eastern region itself. So there could be some disruption there. And then gold also spiked because typically investors will move to a safe haven asset like gold when you see geopolitical upheaval like this. But I do have to say, the reaction that we're getting here is that our allies have actually digested the news pretty well, and they have been supporting Donald Trump. So that's why I think the market has been pretty resilient as far as equities are concerned.
Now, the all-important employment report for March was just released. What are the numbers saying, and what would they mean for policy going forward?
It was a bit of a surprise. We grew 98,000 jobs versus consensus of 175. The unemployment rate ticked down to 4.5% from 4.7%, and wages were 0.2% higher. The caveat here was that we saw some significant downward revisions in January and February. So we sold off about 6 to 7 handles in the futures, but I don't think this is anything that's going to move the needle. I think if anything, we're seeing somewhat of a sell-off because it's suggesting that the economy might not be as strong as originally suggested. But as of right now, I think the Fed will continue to stay on track with its 2 interest rate hikes for 2017.
Now, aside from the Syria attack, it has been an incredible busy news week in the U.S. President Trump is meeting with Chinese President Xi Jinping, some shake-up in the White House. Talk to us about all of these.
Yeah, it certainly has been a busy week, and what we're seeing right now is we're in an earnings vacuum, and it was relatively light week for economic data, except for the jobs report, of course, macro events and geopolitics. That's really what traders have been focused on. We saw some shakeups in the White House this week. Of course, there's tensions with North Korea and what's happened with Syria on the overnight. Of course, as you mentioned, President Trump is meeting with the Chinese president. Trump has often said that trade policy with China is unfair to the U.S., so if there is some friction between the leaders, U.S. businesses including tech, agriculture, the auto sector, they get a lot of revenue from China, so they could find themselves in the hot seat. And of course, North Korea appears to be on the table, and that could remind investors of building tensions on the Korean peninsula as well.
I would imagine traders are looking forward to earnings so they can focus on something else besides macro.
Yeah, and so am I. Earnings season officially kicks off on April 13th with the major financials reporting, including Citi, JP Morgan, PNC, and Wells Fargo. As a reminder, U.S. markets will be closed Friday, April 14th in observance of Good Friday. While earnings season is a very busy time for analysts and traders, it will be a welcome distraction from the information vacuum that we are in now. Moves tend to be exaggerated on very light volume when macro events and policy are the only forces that markets are contending with.
Now, speaking of exaggerated moves, the S&P 500 and NASDAQ broke records this week. Am I right?
They sure did, and there was some pretty interesting trade on Wednesday. The NASDAQ composite broke an intraday high that morning, and then just after 2 p.m. Eastern, the S&P 500 sold off, posting the biggest one-day reversal for equities in more than a year, taking the averages down with it. And let's look at some reasons why. The Federal Reserve released the minutes from the March 14th and 15th meeting at 2 p.m., and there were many highlights, but 2 themes stood out. First, the minutes stated that participants were beginning to discuss the gradual reduction of the Fed's $4.5 trillion balance sheet, though no final decision was made. The second theme, although not explicit in the minutes, centered on language that some Fed participants are concerned about equity valuations, and rightly so. Equity markets move lower, Treasury yields move higher following the news, but as often is the case, the initial move was most likely overdone. We saw that recovery on Thursday. I also think, and perhaps more importantly, House Speaker Paul Ryan said in a Q&A event that tax reform could take longer than healthcare overhaul, and that was according to Reuters. Recall, stocks have had a massive run-up on anticipated tax cuts, and those moves to the upside need to be justified by earnings. As far as the second quarter, it isn't likely to repeat the first, but strong economic fundamentals, along with rising corporate earnings, could continue to push markets higher. Rising confidence will support valuation levels and also offers a real possibility of upside surprises in hard economic data, which could translate into even better than expected earnings growth.
Now, Jill, what sector do you think has risk to the downside?
Well, I understand why the banks ran up with more interest rate hikes and potential deregulation, but I'm concerned about the magnitude of the run-up in an environment where there is this much uncertainty around policy. Now, CFRA research, they provided some pretty good insight. The bank stocks have been key beneficiaries of the optimism baked into the market regarding the potential benefits from the Trump administration's policies regarding tax reform, deregulation, and capital spending. So while the S&P 500 bank industry group closed 8.3% below its March 1st high on Wednesday when we had that sell-off, that group still trades 23% above its pre-election price. Combining that with a limited reduction in bank earnings estimates since January 1st, we've seen them come down. That could lead to some caution in the group going into earnings, especially as we are in a wait-and-see mode with regards to legislation on reducing regulation and greater economic growth that forces the Fed to increase interest rates more quickly.
And what sectors are you optimistic about?
Well, the first quarter statistics were pretty impressive, with the NASDAQ Composite delivering the best return of the three main indices of nearly 10%. That was led by NASDAQ heavyweights like Apple and Amazon, and it continued to break all-time highs that we saw this week. The trends that are driving earnings growth in that sector, cloud computing, Internet of Things, mobile and tablet adoption, increasing consumption of video, all those put together, they're still intact, and an improving global economy should allow that to continue for the tech sector.
Well, Jill, thank you very much for your time. I'm sure your day is just beginning, so you do have a beautiful day and, of course, enjoy your weekend.
Thank you.
Jill Maladrino, VOA Channel's TV business correspondent there in New York City. Back here in Africa, the South African market, of course, went further down at intraday after Fitch Ratings downgraded the country's ratings to junk, and this follows the S&P rating, which happened, of course, early this week. Looking at the numbers there, the Johannesburg Stock Exchange was down 0.52%. Over here in Nigeria, the market was trading high at 0.07% at intraday. In Egypt, the market went down 1.44% on Thursday as the market is closed for the weekend today. We'll take a quick break, and when we return, of course, we'll look at other markets. Do stay with us.